Remember AIG? Well, it's up over 20% for the month, and we're looking very good in that stock. Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub, with your midday market update for Monday, the 5th of March. You know, IBM hit $200 a share today. Pretty exciting. Also, is it over, the moving crude oil, or is it just lulling you to sleep? We're looking at crude oil today. We'll also be looking at AIG, Big Lots, and WPX Energy, plus, of course, some other markets as well. Sectors on the move today. Really, everything's pretty much on the negative side, and we'll be looking at that as well. So let's get started right away. But first, you may want to take one-on-one coaching. Is it right for you? That's the big question. It's a free consultation and a free phone call, so give us a call, 877-219-1482, and see how one-on-one coaching can help your trading in 2012. So let's go to our markets, and we're going to go right to our portfolio manager, and we're looking at the S&P 500. You can see it's 75, so a little bit of a negative there. We've seen some profit taking coming into that market, and we'll put the candlestick charts on, one of my favorite ways of charting, and you can see, like today, we're seeing some pressure coming into this market, and it's possible, and we've had an uninterrupted run-up really from the lows here. In December, we kicked in right here at 1292 on the monthlies, but let's just put a Fibonacci tool in here and get an idea of how far this potential market could come back. And right now we think the 1253 is going to be a pretty good area for this market to fall back in, but it could be, we could be looking at the 23% pullback to 1336 and possibly all the way to 1290 or 1300 level again. So we'll have to be careful on that, but generally speaking, the trend is your friend, and the trend is still clearly up in this market. Pretty much the same with the Dow and NASDAQ, but let's take a look at silver. Silver's really on the defensive with a plus 55. Let's go. Plus, the action in silver is not good. This is just not good action. Here's the big negative engulfing line we talked about last week. You've confirmed that. You're down today. Certainly if we take out, if we just do, let's just do a close-only chart. If we close below this level here, and that close is 33.22, we're 33.55 right now. So if we close below that level here, I think we're going to see this market come down quite a bit. We're looking for this market to be somewhat on the defensive until the end of March, and we could see silver certainly trade down to the 32 level. 31 level would not be out of the question in my mind. So let's go to the next big market, and that's, of course, gold. More interesting gold than anything else, and gold is not acting well either. And if we put our Fibonacci tool on gold, we can go from the highs down to the lows, and you can see we're looking at 1644. These are close-only basis. If you put a regular candlestick chart on this market, you've got to go a little bit lower. So we're looking at around the 1618 level, 1616 level potentially. So again, this market does not act that well. If it closes below 1700 today, I think there's a further evidence this market's heading lower. And as I say, I think it's going to be under pressure and on the defensive until the end of March. So let's look at copper. Copper is a function of economic conditions, and copper is down about 1.15%, which is a big move. But this is what we're looking for in copper, and this seems to be the pattern we may be seeing and developing in copper. So obviously, we can look at it and say, okay, this is the top right here in copper, but it looks to me like we're just building this energy field to go higher. So if we see some more action like this and start to move higher, then I think generally speaking, we are building this market to have a move and run up to higher levels. And I would say we'd be looking at maybe the 405 to 410 level. I think that's very much in the cards. So let's see how it stabilizes around the 380 area. If we draw a line from these lines here down through here, it takes us to around 380. So I think there should be good support coming in the market around that time. So let's just clear the screen and go to our next market. And the next market we're looking at is going to be, sorry about that. Next market was going to be the crude oil. I'm going to take it straight to the USO because I think this is what's happening in this market. I want to scope this out just a bit so we get a really nice big picture item here. And I'm going to go from plus 100, obviously, in this particular market, but I'm just going to go to a simple line chart. And this is what I think the beauty of MarketClub is. You can see our monthly trade triangles are obviously very positive, and you can see the way this market's setting up. And we've drawn this over and over, and you can definitely get a picture of where we're heading with it. So here's really where the neckline was on that right here. So we've broken out right here. That's a breakout to the upside. So that's a breakout. And you've got this huge base under this market. This is a huge head and shoulders. That's the left shoulder. That's the head. And we've got this at the right shoulder. So we've seen the breakout. It's not uncommon for a market to come back down to the original breakout point and then regroup and go higher. I think that's what's probably going to happen. I think we're going to regroup over $40, and I think we'll see this market go much, much higher a little later on. But generally speaking, we're looking for this market to make its highs towards the end of March, early April. So again, this is like contrary to what we see in silver. So let's see how that plays out. Let's clear the screen off and go to our next market, and that's going to be, just going to click on the little toggles here. The next market is the euro dollar. Euro dollar is basically in a trading range with a minus 65, sort of choppy action. Nonetheless, it is, and this is what I love with MarketClub, just switch in between the candlestick charts and the line charts. Let's go in 3 months. We get a closer picture. You can see we've had the pullback, and I would bet this is somewhere around about a 60%, 50% pullback. We put the Fibonacci's in there, and there we go. You see, this is what's really interesting with Fibonacci. You hit the number right on the money today. The market reversed, so that's going to be good support around the 131.70 area. Is good support now for this market, and I think that's going to be a real catalyst to push the euro dollar higher. Why it's going higher, it doesn't matter. It really doesn't. The fact is going higher is the important thing when you're a trader. So let's go to the market and go to our next market. We're going to be looking at the Reuters Jeffries index. This index is a great inflation indicator, and if I scope this out just a little bit further, you'll get the idea of what's happening. We talked about the line charts, of course. And I'll put my drawings on here. And sometimes it's just easy just to illustrate these things visually as opposed to talk about them. So here we are. We've got this pattern here. This is like a really kind of like a two lows, major support here. This is a pivot point right here. And if you've seen our videos on pivot points, you know how to measure pivot points. You go from this level here, scope that over here. Let's say we'll call it 325 just for discussion's sake. 325 down to 295, that's 30. So from here to this area here is 30 points. So we add 30 points to the 325, and that takes us up to 355, which is right here. And if we do 355 and scope that across here, it just, I would say maybe that'll be the high, but somewhere around here, that'll be the extent of this pivot point move. So we would look for this market to regroup and then go higher up to the 355 level, providing, of course, that our trade triangles, the monthly and the weekly, are still in place. Now, right now, we have a daily that's giving us a little bit of a trouble short term, but we still have a plus 85, which is a very strong trend to the upside. So let's see how that plays out, and let's go to our next market. And the next market we're going to be looking at, of course, is going to be some of the stocks. MetLife, for one. Now, MetLife, you think, okay, it's a stodgy old firm. It's a plus 85, but we know the trend is up, and we put our trade triangles in there. You can see it was higher earlier today. It's only up 0.26% now. It was actually up about 3% earlier. But you can see that our trade triangles along this stock from 37.32, the market's at 38.55. When I wrote this about the markets, it was higher. But nonetheless, there's a similar pattern that we looked at before with the CRB index. And let me just illustrate that for you very quickly. Here's the double bottom, very similar. There's the what we consider a pivot point right here. So if we just measure from this area here, it's, let's say, 36 down to the lows, and we'll call that 28. So 28 from 36 gives you 8. So this is the difference from here to here is $8. So you simply add $8 onto 36, and it takes you up to 44, which is right here, which also happens to coincide with this resistance area back here that was taking place several months ago last year. It looked like maybe the May period of last year. So let's see how that works out. But generally speaking, we are bullish on MetLife, and we like the trend. It's plus 85, of course, which is a strong trend. The monthly and the weekly still positive. Only the daily is giving us a little bit of a pullback. So let's clear the screen, go to our next market. And the next market we're looking at in this particular sequence is going to be the AIG. Now, AIG, you probably remember, was infamous in regards to the huge bailout that we had. But look at our trade triangles. They're telling you the story that the trend is your friend and the trend is going up. Our last buy point, I'm just going to put, you can see right here, and that was at 25.90, and we're currently trading at 30.41. Now, I'll put my candlestick charts on. You can see actually we were higher earlier on. Let's go just about 3 months. So you can see the trade triangles. Trade triangles came in here 25.90. We traded as high as 31 today. That would have given you over a 20% return in just about a month's time, because that was on the 1st, and we just turned the 5th today. So it's about a 20% return in a very short period of time on a stock that was basically left for dead. And this is the important thing to remember. Things change, and as traders, you have to learn how to trade with the markets. And you can see, obviously, AIG was considerably higher, but let's take a look at where we think it can go. So I think if we go for like 1 year and scope that in just a little bit and get this high up here, let's move that over there. That's a bad data point, by the way. And we put in the Fibonacci tools. So we could be looking at this market moving up to the 36, 41, even 45, 46 level, but certainly the 40 level would look to be in the cards for this market, and that's about a $10 higher, which is about another 30% higher. It's not going to happen overnight, but it looks as though that's the trend. And you also have what I like to see in these markets. You have a pretty massive database right here. This is energy field. We call these energy fields. So that's how long it took AIG to get out of the sewer and start to build itself up. And again, it looks as though it's on its way to move higher. There's the pivot point, double bottoms again. So flipping this over, we're looking certainly at probably the 36 level in the short term, and then I think the 40 level in a little bit longer. So we'll see how that plays out. But again, you have to be flexible, and you have to be not married to any one position and move with the markets and not against them. So let's go to our next market. Next market is WPX, which is a stock, energy stock. And we don't have this has only been trading for a little while, but the pattern still looks pretty good to us. It was today's big mover. It was up almost 3%. It's hard to believe a big mover, 3%, but it was a pretty big mover. So again, we think the pattern is you've had this. Let me just put my telestrator on how I vision this market going, and that is you've had the move up here like this, and now we're sort of seeing this sort of this pullback. And usually when you have a pullback, it's a normal thing in a market to see the market go up, come back, and then step forward again. It's for every action, there's a reaction. Well, this just happens to be a reaction, I think, in a bull market. And I think if we get this market over the 19 level again, possibly making new highs over 20, it's going to be well on its way to moving quite a bit higher. Remember, this market moved from $14.50 up to $19.50. So it's percentage-wise, it's a huge move. So pay attention to that one, see if it works for you, and we'll obviously try and follow that up. If we don't, just give us a call or let us know. And what we want to do in the meantime is just ask yourself, is one-on-one Market Club coaching right for you? We'd love to hear from you, so give us a call. It's a free call, 877-219-1482, and the consultation is free. So it's not going to cost you anything except your time, and it could be time well spent with a one-on-one Market Club coach. So I'm Adam Hewison for Market Club. I'll be back tomorrow, same time, same place. So let's stay tuned, and we'll go from there. Have a great trading day.